Right. Welcome as we make progress. So, as we make progress, there are things you also need to know even as you proceed into your trading journey. Things I know, of course, you must have learned on baby pips, but this is just to put context around the things that you have learned. So, we'll be talking about type of market orders. And then we'll also be doing quite a number of practicals just to drive these lessons home. So number one, we have instant execution. You see, in the market, there are different ways you can pick your order up and send it to the broker before they fill you up. So there's what we call instant execution. Like instant execution is that you want to enter the markets now, now. Now. If you remember, I was talking about a GBP USD sell order. So my order is somewhere around there. This is the demo account we opened when we were trying to practice, and then so I just had that sell order around here, and well, it didn't tap into it, but as you can see, it only means one thing, that the news that came out was also in line with technical analysis. And what was the judgment for that? What was the reason for the sell? Lower high, lower low. As you can remember, I said there are some things that MT5 does not have an MT4. So there's like that part thing now. It's not available here. I could have said I should. Is there even anything I can use here? No. No. So lower high, lower low, lower high, lower low, lower high, lower low. I waited for the market to come and create a lower high so I can follow it to create the new lower low. But let us make progress. So instant execution is that I want to enter the market now. So meaning that, okay, I've analyzed the market and I think that the market should buy. So I want to enter the market now. Now, this is MT4 for laptop. The way it will be on phone is definitely different. What's this? Excuse me. Right. And there's a buy and sell button. Is it this? No. Okay, no. New order. Okay, all right, that's it. So when you click on this arrow that drops and you can see, so there's market execution, like I want to enter the market now with the price. And then we have pending orders. So pending order is that I'm looking at the market, I've made a decision, but it is not now. It is not at this price that I want to enter. So meaning that I want to enter at a future price. Like I'm looking at a point, just like I did in this place now. You can see I was not in the market. So what I set here is a pending order. And we have four types of pending order that we will talk about as we make progress. So for instant execution, it means I want to enter the market now. And since this is a demo account, let's go ahead to make some practice. Click on buy and you can see, can you see? That's an instant buy. We have entered the market immediately. So either for a buy position, for a sell position, that is it. We've entered. Then we wait for the market to do its thing. So that is what we call instant execution or market execution, like we saw over here. And what that simply means is that, oh, I want to enter the market at the current price. I've seen that the market wants to go up or go down from where it is, and I want to enter immediately. I want to enter immediately. Today is Friday. The market will be closing very soon because that is when it closes. The market opens on Sunday by 11 p.m. which is also stroke. Please hold on for me. These guys. Yeah, so what was I saying? Please pardon me. Yeah, so the market closed on Friday, opens by 11 p.m. or 10 p.m. on Sunday in Nigeria. But that Sunday is already Monday. I think, is it in Sydney or in Frankfurt? I can't even remember. But we talked about trading sessions, yeah? So the market has 5 geographical global sessions. So the market opens at a region that gets to, I think, 8 a.m. first, but I've forgotten that region. And their own 8 a.m. on Monday morning is still Sunday by 11 p.m. here in Nigeria. So let's make progress. So instant execution, that's it. I want to enter immediately. I've set the order and then I wait for the market to move. Let's make progress. Buy stop. So remember I said we have instant execution and then we have pending orders. And under pending orders, we have four. We have four type of pending orders. We have four type for, excuse me. We have four types of pending orders, of which number one is buy stop, which I'm so sure you saw on Baby Pips. So number one is buy stop. Number two is sell stop. So yeah, buy stop, sell stop, and then buy limits, and then sell limits. So those are the four type of pending orders that we have. And what they simply mean, what a pending order means is that, oh, I want to engage this market, but not now. From the look of things, okay, let's go to the chart and take example. So let's say, for example, you were looking at um GBP USD, maybe when it was still somewhere here, and you had that conviction based on what you've been taught that the market should come back up before coming down to create a lower high and then follow it to create a lower low. So what you can simply do, like I did on the charts that I just showed to us, let us take this off, is to set a pending order that, okay, I may not be on the charts when the market gets to this point, but based on what I've learned, that when the market gets to somewhere around there, it should drop. So I can set a pending order with my broker on MT4 or MT5, anyone, that okay, oh, as soon as GBP USD gets to this certain price level, it should fill me in for a sell. So that's a kind of pending order, unlike the one you saw that we just did, which is instant execution, which is you sell immediately or buy immediately. So in this case, someone will get into instant execution maybe when you didn't set a pending order and the market has gotten here and you are like, oh, okay, now let me join the move, and then you sell immediately. That is one type of pending order. Another type of pending order again also is that, take for example, the market has come up and you can see that it's bringing signs that it wants to come down. And from what you are looking at, you don't want to sell from somewhere here. Maybe when the market was forming, this was the particular candle that was in play. And then based on some of the things, maybe you've learned on technical analysis, you wanted the market to, come here before you now enter a sell position. So you can also set a pending order that, okay, oh, as I dey see this market, oh, I want to sell, but I only want to sell when it gets here. You can also set a pending order that, okay, oh, this market, oh, I want to sell when it gets to that point. Only fill me in when it gets to that point. So I can also set that pending order there, and then I wait for the market to do what? To do its thing. Now let us now go in depth to explain these four type of pending orders, just as I know that you must have experienced in the markets before now. So number one is buy stop. What does buy stop means? Let us check on Google. Okay, what is leverage? What is lot size? I just typed just zones down. A buy stop order is an instruction to buy a currency pair at the market price once the market reaches your specified price or higher. A buy stop order is an instruction to buy a currency pair when the market reaches a specified level. The buy price is higher than the current market price. So this is the correct word. What that simply means is that, say you want to buy Euro GBP USD, but you want it to get to a future pricing level that is higher than where you are. I'm trying to see how I can break that down to make it more simple. Maybe based on what you've learned from Forex and technical analysis, you have a conviction that the moment GBP USD gets to this point where I have put that line, if GBP USD should get to this place, all things being equal, you should keep buying. So buy stop order is to want to buy an asset at a price that is currently higher than the current market price. Let me take that again. To buy an asset at a future price that is currently higher. Buy is that we are going up. Good. So buy limit is buy stop. Don't get it confused. Buy stop is that, oh, I want to buy this market, but at a future price, setting a pending order. And a buy stop is such that the price is higher than where the price is currently. Currently, this is where GBP USD price is currently. And I have a conviction that, okay, the moment GBP USD gets to this point, you should just continue to buy. So that is me buying at a future price that is higher than the current market price. So what am I going to do? It's simple. I will set a buy stop order here. You get, and yeah, what changed this thing? I'll set a buy stop order there and then tell the market that, okay, I want to buy GBP USD. The moment GBP USD gets to that point, and I'm so sure that it will begin to go, just positive, 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 higher and higher in the next direction. Apply as if I just say. I don't even know if this is what was said before. Hold on. Model looks like one that used to be thicker than this. Oh, either way, it's not the color I want job. So let's make progress, guys. So I can set a buy stop order there, and then maybe my stop loss at this low, and then I look at maybe somewhere here, as take profit or something. We'll still talk about all these things I'm making mention of also as we make progress. So that is for buy stop. To buy a market, a currency pair at a price that is currently higher than the current market price. Same thing as sell stop. Sell stop also means that, oh, I want to sell this market, but of course, I want to sell it at a future price. I want to sell it at a point that is currently lower. No, that's the wrong English. I want to sell it at a point that is lower than the current pricing level in the future. So just as I showed you this I, right? Take, for example, this is also a low, and From here, the market went up before it then began to come down. So let's say that as of when the market was still somewhere here, somewhere around this region, you told yourself that, okay, oh, I know that GBP USD should sell, all things being equal. But the thing about the sell of GBP USD is that I don't want to sell here. I don't want to sell immediately. Please hold on for me, guys. All right, thank you. But you say I don't want to sell here, but I have a strong conviction that if GBP USD should drop to this point and it comes to this point, it should continue to sell. So you can set a pending order that you want to sell GUO, but only until it gets to this point. So that type of order is called what? A sell stop order. And what it means is that you want to sell GBP USD. Don't let's forget that we are assuming that price is currently here. Or, you know what? To drive the example home and better, let's go to the daily time frame to make it easier, because there are some things we can do on the daily time frame for a premium, for a free um oh no for a free trading view that we cannot do on the 4 hour. So let's go to the daily time frame. All right, so let's do this one. Okay, great. So you can see we've removed that pricing level. So let's assume that this is the current market. GBP USD is currently here. Market has come to create a lower low. We are expecting that to go back to create a lower high and then go further to create a lower low. But I'm saying that I don't want to sell at any point. I want to sell at a future price that is currently lower than where the market is. And what is my conviction? My conviction is that if GBP USD should get to this point, it will continue to sell. So since price is currently here, but I want to set my pending order in the future to a place where price will be lower, where I'm putting my order will be lower than where price is currently. So that kind of order is called a what? A sell stop. Putting a sell order at a price that is currently lower, at a price that is lower than the current market price. And buy stop is placing a pending buy order at a future price that is higher than the current market price. Don't let's get it twisted and don't let's get confused. So I can set my pending order there, that once the market comes this down, it should fill me up. And then after I've set my order, what do I do? I just wait. I just wait for the market to, do its thing, and then uh I just make progress from there. So let's check and see. All right, beautiful. Can you see what we are talking about? That the market got to that place, it then triggered you, and currently you are what? You are in profits. So buy stop, sell stop, they are pending orders you set at a future price that is, for buy stop, higher than the current market price, and for sell stop, lower than the current market price. That is them. So let's go to the chart, for example, and have some example. Let's go to MC4 rather and have some example. So let us assume that again I've analyzed GBP USD, and I feel that maybe from next week Monday should continue to sell, but I don't want to sell here. I only want to sell when the market gets to where that line is and goes below it. So what will I do? This is me setting a pending order at a future price that is lower than the current market price. And what I want to do is to sell. So that means what I'm setting is what a sell stop. So I pick my tool, I put it on that line. Whatever principle you want to use to set your stop loss, you set it, and then you also set your take profits. So you can come here if you want to adjust the price. For now, the current entry price is 1.2191, which is not bad. Stop loss level is 460 points, which also means 46 pips. So let's say that maybe the stop loss I want to use is 30 pips. This is just random testing. Aha. So, and then my take profits, maybe 1:3, that's 900. Great. So this is a sell stop order. By the way, this is analysis that you may do. That you did it like this way, and you put all those objects there, does not mean that the order has been placed on your account. So which will also lead us to this next topic. So we'll be doing everything simultaneously. How to take trades from TradingView. I have analyzed the markets. So the first thing I need to do is to take note of my parameters. These are my parameters here. This black line is my entry. The green line is my take profits. And the red line above is my stop loss. Let me go and change the line of this price thing that is moving up and down to something else. Where do I change this? Symbol. Line, color, black, red. Let us make it something neutral. Something that has no relationship with the colors that are currently, in play. Great. That's a very beautiful color. I believe we are together. So that red line is the price for the stop loss. The black line is the price for the entry, and the green line is the price for the take profit. So we have to take note of them. And then we'll go to MT4, and then we want to set a pending order. So we'll click on the icon that we use to set order. We come here, click on pending order. Then can you see it brings the 4 options. And don't forget that what are we doing? We are setting a sell order to sell the market in the future at a price that is currently Chineke, at a price that is lower than the current market price. So I'll choose sell stop, and then I come in here. Can you see at price? That's the future price. So what's the future price? 1.2190. So I put it there. 1.2190. Then I put my stop loss. What's my stop loss? 1.2210. So that is 1.2221. That last zero is the pipette, if you remember. So I often don't do anything with pipettes. And what's the take profits? 1.2101. So take profit is 1.2101. So one of the things you need to know about setting pending orders also is that if the way you have placed the numbers or the parameters are not right, you see this place that is placed, it won't come up, it won't come alive, it won't become bold. So for example, with the same parameter, let's change this order to a buy stop. Can you see that it has changed to blue? If I click on place, it will say invalid parameters. That's also a way to just let you know that, okay, what you are trying to enter is wrong. So I click on place. Can you see? That's the sell stop order right there. This is the stop loss. And then this is the take profits. You get it. You can see it. Sell stop. So same thing with buy stop also. If it were to be a buy stop that, okay, oh, this is GU, I want to buy, but I want the market to come to this upper place. That is me saying I want to buy the market, but at a price that is higher than the current market price. So having done my analysis, I set a buy stop order, and then I check for the parameters here. After I've adjusted it maybe to whatever I want to adjust it to be, I go to MT5. As usual, click on new order. Since it's a pending order, select pending order. I take a buy stop, input the parameters like you saw that I just did, and then I click on place, and that's how that goes. So that's it about buy stop and sell stop. Buying or selling the market at a price that is higher or lower than the market's current price. So let's talk about buy limits, sell limits. So what is buy limit? Remember that buy stop is at a price that is higher than the market's current price. So buy limit is the reverse. Buy limit means that, okay, oh, from the look of things, I want to buy this market. Remember, we are only buying in an uptrend, right? Good. So for example, buy stop is that the customer did what? I said the customer, the trader did what? Placed his buy stop order up above at that region, because maybe that is the market, maybe when the market was still currently here, and he had an inclination after his analysis that the market should what? That the market should buy. So what does he do? He set a buy stop order there and wait for the market to do its thing. And then the market comes and take him along. That is one type of trader. However, buy limits is that I want to buy the markets at a future price, but at a future price that is lower than the current market price. Buy stop is higher, buy limit is lower. So buy stop is that this market has gone to create higher high. I want it to come back to create higher low so I can follow it up. So what do? I set a buy limit order at a price that is lower than the current market price. Meaning that from what I've learned, I know that the market should come back. Of course, how do you know exactly where it will come back to before it starts going back up? That's one of the things we also learn. But let's say that I've learned to, and I'm postulating that the market should drop. It is currently here, oh, but I'm postulating that it should retrace, come back to this point before we start going back up. And since as a trader, one of the things you can't do or want to do is to sit down on the chart 247. So what you want to do is analyze and then most likely set your pending order, just like I did for this GBP USD over here. So what do? I also bring out my tool, and then I do what? I set a pending order that is a what? A buy limit. This time around, it's a buy limit. This is me buying the market at a price in the future that is lower than the current market price. So I set my buy limit order. The market retraces faithfully for me. Unfortunately for me, it picks me up and goes in my direction. Both for buy stop and sell stop, and both for buy limit and sell limit, there could be situations that the market will not even come here if it's not willing to buy. You get the idea? So the market retraces, picks me up, and goes my way. So that is me buying the market at a price that is lower than the current market price when I set that order. And then, same thing with a downtrend situation too. This is a market now. The market has done what? The market has created a low, a lower low, lower high. Market has come to create a new what? A new lower low. So ideally, what should the market do? The market should retrace like it has always been doing retrace to create a new lower high, and then I can follow it to create a new lower low. So what we are saying here now is that me checking and knowing that, okay, maybe most likely the market should retrace to this point, I can then set a pending order there called sell limits, because this one is higher. Remember that sell stop is lower, so sell limit is higher. That when the market comes here, it should pick me for a sell, and then I would follow it to create the new lower low. Either way, sell stop, buy stop, the number one most important thing to know is that we are definitely following what? We are definitely following the trend. I believe we are together. So buy limits, like I just showed us, is I want to buy the markets, but at a price that is lower than the current market price. And sell limits, like I'm just showing us, is I want to sell the markets. This is where the market is currently. This is the current market price, this blue line. I want to sell the market, but at a price that is higher, excuse me, than the current market price. So buy stop, I want to buy at a price that is higher than the current market price. Buy limits, I want to buy at a price that is lower than the current market price. Sell stop, I want to sell, but at a price that is lower than the current market price. And then sell limits, I want to sell, but at a price that is higher than the current market price. So primarily for me as a trader, based on the strategy I trade, I mostly deal with only buy stop and sell stop. I only deal with buy limits and sell limits. I only deal with buy limits and sell limits. And sometimes, which is very rare, instant market execution, which is that, so take for example, maybe I'm waiting for the market, right, to come and create the lower high so I can follow it down. But for some reasons, the market did not come as high as I was expecting initially. Maybe the market retraced to somewhere around here. And I saw that, from what I'm seeing here, the market wants to begin to go down from there immediately. So I can most likely initiate an instant execution order to do what? To then follow the market down. But mostly, I'm always setting a buy limit or a sell limit because of why. Take this example. The market has come to create this lower low, right? So I'll wait for it to come and create the lower high so I can follow it. So since I want to sell, this is me wanting to sell the market at a future price that is higher than the current market price. So that's a sell limit. And let's assume that the market was in a buy position. I can invert this scale. Great. So can you also now see that, supposing this is a buying market, I would say that, oh, the market has done what? Created higher low, higher high, higher low. That's going to create an higher high. So I want to wait for it to come and create a new higher low and then follow it up. So me wanting and waiting to buy the market at a price that is low than the current market price, that's a buy limit. And then I set my buy limits and then I wait for it. So those are the 4 types of pending orders we have in the market. So the next price here we have here is the next market order we have here is what? Stop loss. What's a stop loss? Like the name implies, stop my loss. So take for example, you can remember I told you that for a market that is in a buying environment, for no reason should the market come below this low. For no reason should the market come below this low. So I can set my buy limit somewhere here and then set an order called stop loss, that if I'm buying here, you know, If for any reason the market begins to go further down, further down, further down, and goes beyond this place, that is a loss that I don't understand. That is a loss that has violated and invalidated my buy idea. There's every probability that that means that the market is no longer buying. So what do I want my broker to do? I want you to stop my loss at this point. Ideally, when you buy or sell a market, I believe we are going together. When you buy or sell a market, if you are buying, for example, if the market should go below your buying price, automatically your account will begin to read in loss. So when I sold earlier, you can remember that my account was showing minus. Let's have another example and let's see. Let me sell, for example. All right. So now I've sold. Good. What this minus that you are seeing means that me, I've entered for a sale, but the market is going up and going beyond my entry. Since I want to sell and the market is buying, that's a loss. Do we get it? I believe that we do. I want to take us to 1 minute and see something. Okay. So you can see I think this is the market price. Good. So I sold here. I don't know why the line for sell is not showing. I sold, but the market is currently moving up. Good. Can you see? This is where I sold, but the market has moved here. So since the market has moved here, that is why my account is reading in loss, minus, because I say I want to sell, but the market is buying. So the essence of stop loss now is that, okay, from what I've learned and I think I understand about trading, all things being equal, for no reason should the market come and then come above. Where are all these tools there? Is it here? Hold on for me. Toolbox. Okay, this is what I was looking for. That from what I've learned, to you get me, it is normal for me to first enter a sell and the market is buying a little bit. But for no reason should it go beyond here, provided it wants to sell. So what would I do? I'll put my stop loss at where this line is. That okay, the market can continue to retrace and retrace, so, and that's me being in a loss. But the moment it gets to this place, please take me out, cut my loss, let me wait out and wait for the next opportunity. Losses are part of the game. So there's nothing scary or there's nothing that should scare you about that. So the same scenario also for a buy situation. So let us also imagine that what I entered was a buy. I said that the market should what? That the market should buy, either as an instant execution or as a pending order. I've entered a buy position. So this is the buy. Yeah. So let's take the sell off since we are done with the example. And for the buy also, having bought is like sharp, sharp. The market is waiting for me to make a decision. This is where I bought from, where that line is. But you can see that this line is below where I bought. So that is why it is in a loss. And like I showed us that, okay, from what I've learned, the markets can be moving up and down whenever I enter for a position. But if the markets will buy, for no reason should the markets come below this place, maybe to create the higher low and then bounce up. So for no reason should the markets come below this place. If the market should continue to come below this place, that's me being in a loss. But once it gets here, please stop my loss. Stop loss is a very integral part of this game because you will not always be right. It is not a course. But the thing in trading is that we want to ensure that the number of times that we are right now puts us in a positive account balance than the number of times that we are wrong. So that is what stop loss is. To stop my loss at a certain level that invalidates my trade. What is take profit? So the same way a trade can end in a loss is of course the same way a trade can end and should end in profits. Meaning that, okay, this is a downtrend market. I'm expecting the market to come this way and then go down. So I can say that, number one, first of all, when you come back up, fill my pending order for a sell. And then once the market starts coming down, since I'm selling, what am I? I'm in profits. So I can also now tell the market that, okay, I don't know how far the market may go, but once you pick me up over here for a sell and the market begins to go in my direction, once the market gets to this pricing level, please take my profits for me. You get it? So take profits is also a point where you tell the market to take all the profits that you've been taking. So the essence of all this is also to ensure that you are just not on the charts all the time. So you set your pending order, you go about your day. When the market gets to where your trade is and it triggers you, when it's going in your direction and favor, if the market gets to your TP, it closes your profits for you, even when you are not there. And of course, if the market says that I'm not actually ready to buy or sell, whichever one you chose, the market also can then do what? Go and hit your stop loss, and your account is preserved that way. So that's stop loss, and then that's take profits. Now, lot size. What is lot size? But before we talk about lot size, let's talk about the last one, leverage. You see, in this industry, there's this thing called leverage, and it means that, okay, we checked it, I typed it here. What is leverage in Forex? It's a trading technique that lets traders control a larger amount of money than they have on hand. You know what this means is that, I don't know, but I think I said it in the beginning of the class, that you need, according to what I heard, though I don't know how true it is, but that you need $1 million to move the market by just one pip, just one. So what that means is that ideally, there are capital amounts that you can't use to participate in the market. Facts. Facts. But the thing about leverage is now that your broker is now someone that borrows you money in advance. If I'm correct, I'm not sure, but if I'm correct, to open any trading position, I think you need a minimum of, is it $1,000, $10,000 lots. So what happens is that when you want to open a trading account, you see where your trader will be asking you that what kind of leverage do you want? 1:100, 1:200, 1:300. So what that means is that they are magnifying your account balance for you, although you can't see it. Because what we are saying is that even though you funded $10 and you are able to take a trade with 0.01 lot size, the reason why you can trade that 0.01 lot size with your $10 accounts is because of the leverage that your broker gave you. So leverage, like they said once again, is a technique that lets traders control a larger amount of money than they have on hand. That is scenario number one. Scenario number two is now that in trading, there's what we call lot size. Let us also check for the meaning of that. Lot size in Forex is the quantity of a currency pair that a trader trades. So what is lot size? How best can I put this to us? Like it is said here, the quantity of a pair that a trader trades, and it is used to measure the size of what? A trade. What that means is First of all, let me show us what lot size is. When you want to take a new trade, for example, this is your lot size here, volume. Of course, the way it appears on MT4 or MT5 is different. Let me show you an example. I'll do something right now, and then you see. You can see that this lot size is 0.2. Let me click on buy. See the loss, minus 13.16. Now, let me now make the lot size 0.02. Can you see the loss? This one is minus $1. Let me now click again. But this time around, I will use 2.0. Can you see now that this one is 136, increasing it? So lot size is the quantity of trade that you want to take per time. The quantity of trade that you want to take per time. So for example, you can see that maybe, let's say for example, I dropped a signal on the charts, on the group chat or something. Someone took that trade and that person had a $15 profit from that trade. And that same trade, somebody else took it and that person had $30 profit. Same entry, same stop loss, same take profits. And then, excuse me, there's also another person that took that trade who had a profit of $1,500. Same trade, same entry, same stop loss, same take profits. What is responsible for that action? It is called lot size. So that is where you determine the kind of size of trade you want to enter. Now, lot size is also relative to your account size. So take, for example, if your account balance is $100, there are some lot size you cannot use. Although there is a kind of leverage that you can choose that can help you use a kind of lot size that you should not ideally use on a $100 account. Remember we said that leverage is your broker allowing you to control the kind of money that you do not have normally. Because the thing about lot size is that I need us to understand that lot size also has to do with your capital. So meaning that there's a kind of leverage you can choose to make you feel like you have the amount that you don't have. So you can use crazy lot size. But the thing about lot size is that when you use a crazy lot size and it goes in your favor, that's beautiful. You will thank God. But the thing about it also is that when it goes against you, your account balance can be wiped out in less than a second. So you want to understand this concept very well. So at the end of the day, ideally, what determines the kind of lot size you will use for a trade is your trading account balance, your stop loss. Then that is what determines the kind of lot size that you can use. Your stop loss and the amount you want to risk per trade. So lot size is not random. And it becomes easier in this industry because initially you have to calculate it manually. But now there are applications. In fact, that's what I use. So what you do is inside that application, you include your account balance, include the amount you want to risk per trade or for that trade, include your stop loss. You tell it to calculate and it calculates for you instantly. And then that way you know the lot size to use. It is important because there are just some lot size you can't use for some account balances. It won't go. It won't work. And the same way too, if you have $1 and say you want to use 0.01, 0.001 lot size, it won't open because that $1 is too small. You get it? So it's like there's a certain threshold of account balance you need to have before you can use a certain kind of lot size normally. But this thing called leverage is that your broker can now borrow you money that you do not have to even use a lot size that is not your own. But the terrible thing about using a lot size that is not fit for your account is that at some point your account can blow off. In fact, not it can, it will blow off. Trust me. Because the same way, take for example, this is a $5,000 account. Ideally, for a $5,000 account, let's have this example and see. Let's see if 200 lot size. Can you see? Can you see that I carried it away? That means that I can't use 200 lot size for a $5,000 account. Let's check for 20. Good. You see, that means that I can use 20. But you see this thing called leverage. There's a way it works. If this account were to be on a 1:1,000 leverage, what that means is that although my account balance is $5,000, but in the real market, my broker has given me the ability to trade like someone that has $5 million. Do you know where that 5 million is from? 5,000 times 1:1,000, my leverage. Ideally, I don't use more than 1:100, and I don't encourage anyone to use more than 1:100. So I didn't mean that this account is on a leverage of 1:1,000. Trust me, that thing that wrote 2,000 that did not go, it will go. And remember the trade I opened that time, that the loss was $136. This time around, it will be $1,360. Now look at it. Imagine I took a trade and bam, by the first instance that I opened the trade, my loss is already 1,136 from $5,000 account. Meaning that a small move against me, the account is gone. But also, a small move in my direction, I've most likely doubled the account. But that's not trading. And that's not what you want to do. So that is lot size. Lot size is the quantity you want to use per trade. And there are different kind of lot size that you cannot use for different kind of accounts. Oh, amazing. Can you even see? That is 20. Can you see what we are saying now? So out of 5,000, I'm already gambling with 1,300. Any small move against me, everything is destroyed. Everything is gone. So meaning that ideally, I should not be able to open this trade. Maybe the leverage of this account is already even at that 1:1,000. Because ideally, your broker should not permit you to risk. This is almost more than 20% of your equity per trade. But that is what leverage does. Because the same way I'm seeing minus 1,300, by the time the trade starts going in my way, just one tiny movement, you can begin to see maybe 1,500. Can you see that it's reducing drastically? Can you see? And any small movement, this minus 1, 2, can become plus $12,000. So we can say that, oh, in less than 5 minutes, I've quadrupled my account. But that's because it went in my favor. What about if it goes against me? So you want to use a moderate leverage for your accounts. And then when you are taking a trade, having set your, having done your analysis properly, and you know where you want your stop loss to be, where your take profit to be. So what you want to do is, in fact, let's even check if we can, find it. Lot size calculator. What's with this? What is going on here? Also, position size calculator. So let's check. So can you see account balance? Let's say my account balance is $100. Risk percentage. So ideally, take for example, for a $100 account now, I don't encourage you to risk more than 5%. The higher your account, the lower your risk. So take for example, for a $10,000 account, I won't encourage you to risk more than 1%. That's $100. But this is the case of 100, and that's 1% of $10,000 is $100. But in the case of a $100 account, the maximum you should ever risk is $5 per trade, and that's 5%. In fact, let's trade like normal professional traders. So my account balance is 1,000. And what do I want to risk per trade? 1%. That is $10. So I put that one. So stop loss in pips. Remember that we've done our analysis here. That okay, when the market gets here, it should sell, all things being equal. And my stop loss above where? Above this high. So what is my stop loss in pip? How do I know it? You can click here. You see, this is the stop loss. Just as when you are counting pips, that last number does not count. In this case also, this last number does not count. You know, this is stop loss. That's stop level. So in this case, my stop loss is 123. So I come here and then I put what? This percentage is 1. Stop loss in pips, 123. Amazingly, you may not bring an answer out. So there's an answer. So this is what we focus on, standard law. Can you see? It calculated it automatically for me. The amount I'm risking is $10. And the lot size I'm supposed to use for that trade is 0.008. So this thing just makes it beautiful. That for that stop loss, so once the market goes against me and goes to hit that stop loss, I would lose just what? $10. So your stop loss, your lot size will always vary per trade because your stop loss in pips will not always be uniform. There are days that your stop loss will definitely be less than this, and there are also days that your stop loss will be more than this. But actually, that's the 123 pips stop loss. I've never taken that trade before. The maximum I've ever had to use is 40 pips, where I might have to change it in the future because I'm also growing and learning the way some professional trader trades. But for now, that is how I do. So this is 68 pip. Let us go and put 68 pip and see another example. Remember that this one is 0.08, right? So for 68, let's see. Can you see that it has changed? So meaning that this same trade, although the lot size has changed, but at the end of the day, so far this is my entry, this is my stop loss. Once the market fills me in, and if for any reason it goes to my stop loss, what I will still be debited is what? Is $10. So that's the wisdom and power of lot size. That is what apportions the quantity I want to risk per trade. And then we go on and on. Same scenario too, if it were to be that I'm buying. So let's say I want to buy at a future lower price. Yeah, that's a buy limit. I want to buy at a future price that is lower than the current market price. That's a buy limit. Although this is a selling market, so there's no reason why I should be looking for buying opportunities in the selling market. But I'm just trying to cite an example. So that's my entry price. So my stop loss this time around, let's say it's 50 pips. Remember, this last zero does not count, but you still have to put the 500. So, and I still have my account size of what? $1,000, risking only 1% per trade. But this time around, my stop loss is 50 pips. The pair, of course, you also choose the pair. But let's just, okay, that's Euro USD. Let's stay with our GBP USD. And then I calculate. Can you see? My lot size is what? 0.02. Does it make sense? I believe it does. So that's it, guys. Let us wrap up. In the market, we have 4 types of orders that are pending. Buy stop, buying at a price that is higher than the current market price. Sell stop, selling at a price that is lower than the current market price. Buy limits, buying at a price that is lower than the current market price. Sell limits, selling at a price that is higher than the current market price. Entry price, the price you want to enter the market, either as a pending order or as an instant execution. Stop loss, the highest point of invalidation, where you think that if the market should get there, your sell or buy bias, that's what we often call it, is no longer valid. Take profits. Oh, the market, when it starts going in my direction, oh, but the moment it gets to this point, I don't know, who knows, it may get there and just turn back, and it may get there and go further. But the moment market gets to this point, whatever profit I've made, please take it for me. And then lots and lot size. I showed us already, and I showed us the power of leverage, which is that you don't want to use a wrong leverage for your accounts. So one more thing before we go, when you click on this tool now, you'll see a figure here like 5.19. There's what we call risk to reward in trading. And what risk to reward simply means is that when I'm risking a certain amount, I'm looking to make also a certain amount. So let's say that if I'm taking a trade and my risk to reward is 1:2, what that means is that I want to make times 2 of what I'm risking. So if I'm risking $10 for a trade, like I showed us in that example, then that means that for a 1:2 take profits, what I'll make is $20. And then for 1:3, $30. For 1:5, that would be $50. You get, and for 1:5.9, it just simply means 5.19, rather, it just simply means 5.19 times the amount I'm risking. So that's the meaning of this thing, that 5 that you are seeing here. Because on different occasions, it will always change depending on your targets, depending on what you think the market should do. So if you look at it now, you realize that that 5.19 has changed 3. What it also just means is that for this trade, or whatever I risk, I want to make times 3 of it, or I will make times 3. Not I want to. I will make times 3 of it when the market hits my take profits. So that will be all for this session, guys. That would exactly be all as we make progress. So go into your chart, go into your MT4, your demo accounts, and keep practicing until you fully understand what a buy stop is, what a sell stop is. If you have TradingView PC or phone, bring out those tools, make analysis. I've taught you market structure, which we'll still go further into actually. But this is a market that has created a lower low. So since it has created the lower low, I would be patient for it to come and create a lower high so I can follow it down because it's a selling market and I only want to buy. So in this case, if I want it to get up here before I sell, what am I setting? A sell limit. So you bring out the tool, set it, put the stop loss at the highest point of invalidation, put your TP at where you think is the most conservative place, and then go to your MT4 or MT5, taking the parameters. The parameters, depending on the setting you have, may not show here. But when you click on this and click on this setting icon, you should still see everything here. This is your entry price. This is your take profit price. Not tick, so price. But tick is what you use to set your stop loss in pip. So let's say this trade, I want it to have a 50 pip stop loss. I put 500. I'll put 500, but it means 50 because that last zero does not count. If I want it to have a 25 pip stop loss, I'll put 250, although that zero does not count. You can see that it has reduced in size. And then for take profits too, let's say maybe I want a 1:3. So that would be 250, what I'm risking times 3. That's 750. First of all, I want you to take note. You can see this is 11.26. That means 1:11. Once I put 750, you can use it as adjusted the price itself. So that's it, guys. Keep practicing and practicing until you now understand some of all these things. And then we can move further to the next class. So that will be all for this session and module also. Put in the work to study, understand, and learn. You want to be serious with your study, but at the same time, so don't be in a rush and hurry to practice for the sake of wanting to begin to make money. No, don't do that to yourself. The market has always been here. The market will always be here, even after we are gone. So that will be all for this session, guys. Cheers and what? God bless. See you on the other side.